What's going on, everyone? It's Jed. Welcome to a bite-sized lesson on backside and frontside levels. We're just going to go over backside levels in this bite-sized video. I'll make the next bite-sized video on front sides. But for now, I have this small, little drawing that I made. Hopefully, this will help for anyone that's that's a visual learner like I am. So anyway, let's get to it. Backside levels, what are they? Backside levels, you can think of them as volatile points, leverage points. You see those wicks, those large wicks, and they touch the, perfectly on that level. That's what a backside level is. Sometimes sometimes you see large wicks, sometimes they can be, big like that, or maybe even like just small like that. But the whole point is that this is like sort of a untested level. Think of it as an untested level where you can get large wicks, you can get small wicks, and majority of the time, trend does end up falling down to, a next backside level here to find support and find, its second point of a ladder to test the front side. But again, think of backside levels as untested levels, okay? So backside levels, they are the first green candle, right? That starts an uptrend before it moves down. Okay, so that creates a peak. I'll show you with a couple examples in just a minute. And same applies for the downside. So it finds a bottom because it finds a swing high low, or low to swing low here, right? This is going to be the green candle that starts the uptrend, right? Now, sometimes we see, again, large wicks on these backside levels. Sometimes we see large wicks, it'll fall down and, test again, swing low or swing high. You create your backside and it creates a front side as it moves up, okay? So backside levels, again, are leverage points. They're volatile points, okay? If they're supports, they're, again, volatile points. If they're resistance, very volatile rejection zones, okay? So hopefully this little picture works, and seeing the candles, hourly candles can get really confusing. So I made, I have a couple examples here. So in this scenario, this is all current data with Bitcoin as well. So Bitcoin, right? We have this uptrend that started, we have this uptrend, right? The green candle, this started the uptrend before it moved down, okay? So this creates a peak, right? Just like what we saw in that little picture I have above, okay? You can see it moves down, Bitcoin, whatever tests, daily support somewhere here, okay? I don't know, okay? But the whole point is that it creates the backside point here, right? So it breaks, finds the backside, moves in an uptrend, and it goes up and perfectly tests this backside level. A lot of you are so used to marking, swing highs, swing lows. In my opinion, those are very basic levels, guys. You're gonna say, "Oh my God, why was there such a large wick here? It didn't test my swing high here on the 1 hour." Because you didn't mark your backside, okay? And you can see it swing highs. This is an untested. Well, this is actually a tested level, but this was created June 6th, and it took almost a little more than a week to test it. Okay, there's so much money to be made in the zone here. All you had to do was just mark one backside level. I mean, there's a couple backside levels here, but again, the whole point is figuring out what makes the most sense. All right, so you have this backside here, okay? And let's delete these now. I know we're not going over front side, but just FYI, if this is the backside, this would be the front side of the move. Oh, I'm sorry, not this one. This would be the front side of the move, okay? And as this gets tested, you can keep this here, you can keep this here, right? But your next backside would evolve, okay? For me, if it's already been a downtrend, you would mark it to the most current peak, right? Which would be this here, right? This would now become your backside level. And as you can see here, here's your backside level. This would be your front side, right? This would be your front side to your backside. But again, we're not doing front side right now, okay? So this would be your backside. And as you can see, this is a volatile point, rejection, okay? volatile points, leverage points, okay? Think of them as that. Think of them as untested levels, all right? You know, if you were someone, beginner, that had their swing low here, you're like, man, why didn't it get hit? I had my swing low of the high marked here when I was off by, 0.13%. And why were you off? What didn't hit? That's because it was the backside level here. So on the next example I have here, we can start off even back here, because technically this is the green candle that started this local uptrend here, right? So if you just mark this out for you guys here, right? This is the uptrend, and this also creates a peak, right? This is the peak, right? The peak before the downtrend. Now it doesn't look exactly like the same as that drawing as I made up there, but the whole point was that this is the green candle that started the uptrend before it moved down. So in this case, this is the backside, right? So this is the backside, and as you can see here, it was a nice rejection here, actually, literally off by like pennies on the dollar. But the whole point is that it rejected here. Some people may say, why? What am I missing? The swing highs all the way up here. Why? Why did it reject in this region here, in the middle of this downtrend? In the middle of this huge red candle, and that's because it's rejecting the backside level here, right? Now again, like I said, when these get tested, you move them to what's more local, okay? There, I'm not moving here, which is actually quite advanced, but you would move it to here, all right? This is the backside, and then this would be, you can mark the front side levels here, whichever you prefer. But the whole point is that, again, we're only doing backside levels here, but the whole point here is that this would now be the more local backside, okay? So this would be the backside. That level already touched, okay? Where was it? Yeah, back here. That level already touched. You got this backside level here, and then this backside level here, right? So perfect rejection here, right? Why? Because this is the green candle, right, that started this uptrend, right? It moved down, and then this is the green candle that started this uptrend from this downtrend here. So move this here. So again, uptrend, and now you guys can see this is a peak, right? But not as big. Now it looks more like the drawing I had earlier, okay? Because it's much smaller. But the whole point is that this is the most local uptrend, okay? And then you have the backside right here, right? But as soon as this gets tested, which again, this is a perfect leverage point. This is what I mean. When I was leveraging, I saw the most amounts of money from leveraging, and that's because you get wicks like this you get to play with. Very volatile moves in a matter of minutes, okay? So again, backsides, volatile movements, leverage points, okay? You don't have to leverage to use them. You can simply trade by them, trade with them, instead of, waiting for this swing high, right? Like, the whole point of trading is become efficient, right? Become efficient and, maximize the amount of trades without, doing too much, okay? There's only 4, and not including these front side levels, there's only 2 levels here, guys, okay? And that's what trading should be. You don't have to clutter your chart with a million levels, with a million swing highs and lows. You can still make massive amounts of money off them, but again, that's beginner stuff, guys. We're moving on to intermediate. Actually, no, we're moving on to advanced stuff. All right, so backside levels. So as this gets tested, right, you can keep it there if you want. All right, I like to delete them out. And now this would be your front side, right? This would be this would be your back side. I'm sorry. This would be the front side, right? So here, perfect rejection point on the key, on the dot, right? So again, you might have marked your swing higher here, right? Last green candle before the downtrend. Again, you can make a lot of money. Again, I'm not saying you can't make money off swing highs and swing lows. You can, but I mean, it's just here, guys. This is a perfect, accurate pinpoint levels, okay? What if this level ended up getting rejected and fell down below? Your swing highs would have never got filled. Your swing highs, would have never got filled, right? So the backside levels is pretty much the first line of defense. Think of them as an untested level, and think of it as, a resistance in this scenario. Think of them as a sell points, okay? Perfect sell points, all right? So again, hopefully that helps. Hopefully that helps everyone here. Hopefully this is nice, clear and concise. You may have to rewind this video a couple times, rewind a couple parts if you need to. Please, if you have any questions, feel free to shoot me a DM or just at me in the general chat, and I'll be more than happy to answer your questions. But again, please rewind this video a couple times. I recommend watching, I recommend watching the whole video without, rewinding, and then watch it a second time, and then find, the points that you need to rewind. Okay, so yeah, I'll see you in the front side bite-sized lesson in a few. Bye, guys.